Hello and welcome to our weekly update here at OPC Markets, and just looking ahead to some of the things to watch out for in the coming days if you are trading the markets. And well, today on Monday we've got a big sell-off across the risk spectrum. Equity selling off heavily off the back of the Evergrande situation, risk of a default, major fallout, major contagion risks being seen there. We saw the Hang Seng index off 3.5% on Monday, and global stock markets are much weaker today. Declines of 2.5% or so for European markets. The FTSE 100 in London is not quite so badly damaged. Its index makeup and a generally softer sterling is helping it to a degree. Coming up this week, apart from that Evergrande story, we've also got a run into German election on Sunday. Worries, I guess, are weighing a little bit on European thinking, at least in terms of the European project. What does the end of Angela Merkel as the Chancellor of Germany mean for the European project? A big debate there, big question marks about that, and what this election is going to mean for the European project, for the EU, and potentially for financial markets, of course, as well. We also have the Fed meeting on Wednesday, statement due out as per usual, with a press conference to follow. Question marks over whether it signals it's going to taper this year. It may choose to avoid saying that at this meeting, but still be able to taper later on in the year. The real doubts, the real hawkish risk that we see is around the dot plot, if you're still looking at those, if they still matter. They are, of course, the sort of best guess of Fed policymakers in terms of what they think or when they think interest rates will go up. Median expectations around 2023 for liftoff at the moment, but they could be brought in. It could come a bit nearer. Risks to inflation outlook certainly are a problem there. Massive overshooting inflation at the moment. It does look like that we'll see an upwards revision to inflation forecasts, and that could be accompanied by more FOMC policymakers signaling an earlier rate hike. So risks there, but also we've got this market sell-off, so they may decide to just play it cool. Bank of England also coming up this week on Thursday. It's going to have to respond to the hottest month-on-month jump in inflation on record, or at least since the Bank of England became independent in 1997. Going into the end of the week, we've got PMIs from the US, UK, Eurozone as well. It's a holiday for China, Monday, Tuesday. We've also got a holiday. It was a holiday today for Japan. So a bit of thin liquidity in some of the Asian sessions going to be this week. But heavy volume in Europe today. Biggest volume in equities for some months. Oil markets are a tad weaker, responding to the generally risk-off sentiment. We're looking ahead to the inventory data, of course, coming up later in the week. Some good news though for oil markets, and this afternoon with the US set to end ban on UK and EU travellers entering America. Finally, nat gas prices are still a major problem here in the UK and in Europe, but we have seen the Henry Hub contract just come off its highs that it hit last week, and so a bit of consolidation there. Maybe that sort of aggressive crunch that we've seen is maybe just starting to play out. We need to wait and see what happens as the effect of Hurricane Nicholas and Hurricane Ida are unwound. So lots to look out for this week, lots of risk, lots of volatility, and we wish you a good trading week ahead.